Hello and welcome to Business Beat on 90.5 WICN Public Radio. My name is David Ginsburg. You would normally hear my co-host Giselle Rivera-Flores introducing herself. She hopefully will be joining us during the show. Her day job has once again overtaken her volunteer job. But I'm excited to be with you today because joining us at Business Beat this week from PKF O'Connor Davies is Laura Barooshian. And Laura, welcome to the show. You are a partner at PKF O'Connor Davies. We've got a lot to talk about.
That's right, David. Thank you. Yeah, there's a lot going on in the tax world these days.
There sure is, especially as we're now entering the final months of the year and people start planning to get their taxes prepared for next year and also doing our household budgeting. But the big news is that Governor Healy had signed into law in Massachusetts on October 4th, the first tax cut in more than 20 years. And this is a $1 billion package. So this is a pretty big deal.
Yeah, there's a lot of things here for everybody, whether you're a business owner, you're an individual taxpayer, a senior, someone with a low income, there's something here for everyone.
And among them, because I think it's important, we talk a lot about social issues on the show, and I think it's important to wrap in that the child and family tax credit has been expanded and is now the most generous in the country, which is extraordinary. And I would love to learn more about that, if possible, and talk a little bit more about how that's going to be beneficial for the people that need it the most.
Yeah, I think that the biggest thing there is there had been a 2-dependent cap on that credit. And now that increases that from $180 per dependent child, disabled adult, or a senior to $310 in 23, and then a further increase in 2024 to $440 permanently going forward. So it really is a material difference for folks who really do need it.
Yeah, because that's a substantial amount of money for those folks that are living on very tight margins.
Mm-hmm. Yeah, and more than 500,000 families in the Bay State will be impacted. So that's really a positive change for so many.
For sure. And I know one of the other ones that jumps out at me is there's an increase in the rental deduction, and some of that in a city like Worcester, which is 60% renters, and in a very, very tight housing market, and rental prices have increased significantly over the last couple of years. How does that rental deduction impact people's budgets as they plan for their taxes and their household budgets going forward?
Yeah, previously the rental cap had been maxed at $3,000 each year annually, and now that's going to go up to $4,000. So it may not quite be keeping pace with what rent prices are, which is unfortunate, but it is great to see Governor Healy and the team really working towards looking at the cost of rent and making a modification for that.
Yeah, and for renters, that extra $1,000 you can deduct on your taxes is significant.
Yeah, it makes a difference.
It
really does.
It sure does. And because thankfully I'm not yet a senior, can you explain a little bit about what the senior circuit breaker tax credit is and how that's going to be impactful?
Yeah, the circuit breaker credit really, it's what's wonderful is the credit is being doubled. It's also being indexed through inflation. And it provides those seniors that are on a fixed budget, that have their tax bills, their real estate tax bills, those costs that they're really increasing year to year, to go from $1,200 to $2,400.
Wow.
So that's a really huge increase for them.
It sure is. And again, seniors living on fixed incomes in particular, in an environment of high inflation rates, property taxes, again, speaking to Worcester locally, our residential tax rates, trust me on this one, I as a homeowner, have gone up every year, and it has become burdensome. So that relief is important in allowing people to have some flexibility and some disposable income. Hopefully they can spend elsewhere in the economy or save.
Yeah. Savings or medication costs, other things might be going up. That's a great way for them to be able to repurpose some dollars into other areas.
For sure. And it seems the relief is really one of the good things about this package. And I know, you go back to Massachusetts as a lifelong resident in the 70s and 80s, especially, and the reputation as Taxachusetts and the derision that came with that. And although I think we've moved away from that to some degree as the high-tech economy has exploded and as an educational hub, and the quality of life in Massachusetts tends to be very high, there is some of that perception that remains. And how does this tax package, this tax cut of $1 billion plus, impact that notion of Massachusetts being a high-tax state?
Yeah, it's an interesting time that we're in because, as we're all aware, and I'm sure we're going to talk about, is we also have, in light of all of these credits and deductions that are coming through and impacting those in our, in our communities, we're also at a time where we're increasing the tax rate for millionaires to 9%, the millionaires tax,
Yep.
which we'll talk about. So I think one of the things personally is that, there are, additional taxes that are coming into play, which may be helping to perpetuate that reputation that we have. But generally, those in the Bay State are paying 5% on their taxes, and 5% in comparison to other states is relatively low. Maybe not as low as our friends from New Hampshire, but north of the border there. But certainly, as far as comparing to some other states, it's not as high as others can be. And then if you've got these credits available to you and reducing that taxable income, it really does make a difference.
It does, and I think you raised a good point. I wanted to touch on this quickly in that there's a notion because New Hampshire, as an example, doesn't have a state income tax. People think you're saving a fortune, and you may be saving the income tax payment itself, but you get nickel and dime taxes, sales taxes, surplus taxes, hotel taxes, gas taxes. So they're making up for that income tax revenue elsewhere, and you're paying it
Exactly.
every time you shop in the state to do anything.
Exactly, because their roads are paved and they've got healthcare workers and systems and everything else
Yeah.
that need to be supplemented as well. So it comes from somewhere. There's always a tax.
Of course there is. If you're heading up to the White Mountains or Winnipesaukee in the summertime, you're helping to fund all those improvements while you're claiming that you're not paying any income taxes. I just think it's interesting to highlight those pieces of it. And the other thing you mentioned quickly is the estate tax, and there's a cut in short-term capital gains taxes. The estate tax doesn't affect that many families, but it does affect enough that it's great to see that this being addressed in this package.
Yeah, I think one of the most exciting things that really is this estate tax change, where previously, if you had, a good retirement account, you had a piece of property that maybe you've owned for a long time that's appreciated well, you've got a few assets and stuff, that $1 million wasn't too far away, maybe
Hmm.
for you. And once you went over $1 million, you were subject to the estate tax. Now it truly is an exemption of $2 million per person. So you really do the first taxable dollar isn't until you go over that 2 million mark. So it truly is a real great step in the right direction as far as estate changes, because we are one of the few states that has an estate tax. And it is something that'll help hopefully keep folks here in Massachusetts, let them invest in businesses, grow that, more real estate. You mentioned education, they go
Yep.
to school here and then stay here. So it really is a real great step in the right direction.
It is. And also for people that may inherit that property, that land, that it alleviates some of the burden that they're going to face at what can be a very difficult time. And if they're in tighter financial circumstances, that's a relief for those people as well. And I do want to talk to you a little bit about the millionaire's tax, because this is a new endeavor. This was a ballot initiative a year ago that passed. And I think there's some confusion over how this actually works. It's not that that additional tax applies to the first dollar. It's the first dollar after the $1 million in annual income that gets taxed at that higher rate.
That's correct. And there was a little bit of a wrinkle in the bill that Governor Haley passed as well, signed, that says that the rule says that taxable income in excess of $1 million will be subject to an additional 4% tax. So you do, if you're under $1 million, this tax is not going to change. This millionaire's tax is not going to change your tax bill. It's only that first dollar after. The wrinkle is that filing status that you have in Massachusetts, beginning in 2024, will have to match how you file your federal tax return. So if I file jointly with my spouse and for federal, I'll have to do that in Massachusetts beginning in 24. 2023 has a little bit of an opportunity though for you to file separately in Massachusetts and split the income. So two earners at, say 600,000 each
Yep.
combined would get 1 million too. Separately though, in 2023, it's a 1 year thing.
Yep.
So it's just the 1 year, but that may be something that folks want to talk to their tax advisors about.
That makes a lot of sense. And I think in an overarching state of things, you should talk to your tax advisor regardless. Anytime there are tax changes and tax laws, you want to talk to people like you, because where else can we save some money, plan differently for the future that's going to offset some longer term capital gains, or, as you reach retirement age or begin getting Social Security, that you can plan for the future accordingly, and any tax incentive or burdens that may be looming on the horizon get addressed in advance.
You're right, David. I get to do taxes every day. It's something I love to do. I get to do just the best career ever. And many folks won't agree with that or think they're wrong with me, but I really do enjoy it. And I really enjoy working with my clients. And it is when you can have those conversations about what is going on. Is it something going on in their world that's, you mentioned a short-term capital gain? Well, holding on to that until you reach a year and a day gets a long-term rate, which is much lower than the short-term rates. Things like that, having those conversations with your tax advisors, whether there's changes going on in the tax law or just things happening in your life. You're getting married, you might not, you're getting divorced. There's other things. You moved to the state from another state.
Yeah,
Every state rules are different. So all of those things are great reasons to have a really good tax advisor in your court.
I agree. And within that, I want to come back to tax cuts in a moment, but in as many of us are you reach a certain age and you have aging parents that need much more supervision than they did, in the younger days, which includes the financial aspect and managing their assets, especially if there's nursing home or other long-term care involved where you need to move assets to protect them so that they don't have to spend down everything they have to qualify for Medicaid, while also raising a family and trying to save for education and your own retirement. The need for a tax professional to help you plan for all of those things and help to mitigate some of the impacts that you could face is especially acute for those people. Is that accurate?
Absolutely. And one of the things I love, again, with what I do and those that I work with at Pico O'Connor Davies, we want to make sure that we're working with the client's entire team. So there could be a financial advisor. Clearly, things like that, you want to work with an estate attorney, maybe a Medicare or Social Security specialist as well. Whenever you're dealing with those kinds of things, you want to make sure you're doing that right. And it's worth the investment. And it truly is an investment of having the right people at the table that can help you with your situation, your parents. I see a lot of that with my clients where they're taking care of their parents now and stepping in.
Yep.
So having the right team with you, accountants, as well as those other advisors as well, really can pay off in the long run so that you don't find out after the fact that, oh, you should have done A instead of B.
You're right. And people lose their assets or they get hit with a tax bill that's unexpected that they are then scrambling to find a way to pay for and incurring interest penalty payments along the way with that, especially
Exactly.
at that difficult time. Coming back to the tax relief that was passed at the beginning of October, we've talked about some of the individual elements that fall within that. But what was the primary goal behind implementing this overall package for the state of Massachusetts and its residents?
Yeah, I think the real incentive was, like you said at the beginning, it's been 20 years. It's been a long time since we've seen a real hard look at what are, the deductions and credits that we're offering to those residents that are staying here in the state, that are, supporting the economy that we have here as well. So I think it really was, it was time, over time maybe,
Yeah.
to take a hard look at what we have and to be competitive with other states as well and what other places might be doing.
Yeah, without question. And it's also that, for years there was difficulty in getting the sales tax lowered by a percentage point, and before it went back up, of course. And I'm just curious, speculatively, is there a potential to see a reduction in the sales tax in Massachusetts, which is currently, I think, 6.25%?
Yeah, it's 6.25. I haven't seen anything recently on the sales tax. I mean, a lot of that sales tax revenue is also generated by the tourist industry that we have
Right.
and those coming in. So it really does help supplement other parts of our, benefits, in our economy here in the state. So
Yeah. And so I guess my follow question then, and this is the last question before the break, would be, does the overall tax reduction, because it sort of spreads the benefits across the spectrum financially, offset some of the sales tax at six and a quarter because you're saving money on these other endeavors? Is that fair to say?
it's a fair statement to say yes.
Excellent. Well, thank you. I'm having a fascinating conversation about taxes and the new tax package law in Massachusetts with Laura Barooshian from PKF O'Connor Davies. So, one of the things that is important to note here, and a lot of our listeners, we know anecdotally, at least for WICN, are homeowners and they have invested in their homes. If you've been in your home a long time, especially, you've done everything from putting on a new roof and new siding to driveways, interior renovations. And you had mentioned something, and I want to touch on this, the importance of keeping records of these endeavors so that when the time comes, whether you're going to sell or there's a tax gain to be made here, that you're prepared and not going to be penalized for having done these activities.
That's a great point. I see a lot of this in my practice, David. So the IRS in Massachusetts have the same rule. as long as I've lived in the property as my primary residence for 2 out of the 5 years before it's sold, I can exclude up to $250,000 of gain if I'm single or married filing separate, and up to $500,000 if I'm married filing joint.
Oh, wow.
So that's fantastic. But what if my gain is more than that? What if I've been very fortunate or I've owned the home for a really long time? The IRS and Massachusetts allow us to offset the sale price with how much is our cost basis. And cost basis is what you paid for the property and all of those improvements that you just mentioned: driveways, generators, gutters, windows, all these wonderful things that we do, additions, renovations, all of those things that we do to the property. The most important thing I can tell your listeners is to keep good records of those improvements, including canceled checks, bank statements, things that show that you paid for those improvements, the contractor bills,
Yeah.
all of those things. Keep those because they don't matter until you sell the property, and your accountant is going to say, okay, what's your basis and tell me about the improvements. That number has to go on your return to support kind of those records have to support the cost basis that you report on your return. And then you can apply that exclusion of 250 or 500. Selling costs are also included. So there really is an incentive for your listeners to make sure they've got those good records. Electronic is fine, in paper is fine, but keep them safe, keep them secure.
That's a tremendous point, especially in light of the pandemic when so many people invested in their homes, invested in home improvements, added offices, ADUs, added new roofs, whatever the case may be. And keeping those records, and it should be in our electronic age, should be a bit easier if you took out a home equity line as an example. Then you have the account info that will show your transactions within that. If you wrote checks to your contractor, your driveway guy, I'm speaking from direct experience here, that you have copies of those things in your electronic records so that when the time comes, to Laura's point, that you're able to take the full benefit that's there because it's a tremendous amount of money on the line here for these things.
Yeah, because you could be paying as much as, 24 to, 30 to 35% on a taxable gain. So there's like I said, real incentive to make sure you have good records so you minimize that tax bill as much as possible.
For sure. In the
Mhm.
overall look at this tax relief package that passed, who benefits the most from these? And as a parallel, how do these measures then impact the state's revenue and budget?
Yeah, we are seeing a little bit in general, just really big picture. We've seen a little bit of a slowdown in revenue collections this year. That was probably more prominent at the beginning of the year. Some of that's leveled off as we've gone through the summer. I haven't seen recent numbers, but I saw some numbers through the summer. Now, whether that's just a little bit of a slowdown in the economy or just in collections in general, but we are seeing that that the benefits that these rules are going to go into effect for 2023. So we'll really see throughout next year the impact that they're having, how many households are really, are going to take advantage of some of the dependent deductions or, the earned income tax credit and the housing development programs and some of the other things that are there for businesses as well. We'll really get a feel for that. But I think overall, it's a net positive to those that are most impacted on fixed incomes, lower incomes, and to our business owners as well.
Yeah, so effectively, the people that need it the most will be the ones that receive the highest benefit.
Really. Yes,
Yeah,
that's true.
that's great.
Yeah.
Are there specific industries that will be affected differently by these changes?
I think there are a couple of very specific things. So there is a credit for lead paint abatement.
Yep.
And, we've got a lot of old real estate here in Massachusetts as well. A lot of homes with lead paint where that may be a concern. There's a doubling of the credit there, and that should perpetuate some additional activity in that industry. There's some housing development incentives as well, some in construction industry,
Yep.
those kinds of things. So I can definitely see some of those, taking advantage
For
of
sure. And I'm glad you mentioned the Housing Development Incentive Program because that's an important one at a time when there's such a housing crunch, not only across the country, but in Massachusetts in particular, and especially in Worcester County, which has exploded in the last 10 years, added a ton of new residents, but really through Metro West and the Boston area where the median home price is now over $900,000. We've got to be able to build more housing, but building has become expensive and more expensive with interest rates now at 8% or thereabouts. It's much more expensive to borrow that money to build. And so your margins get tighter. Is there an opportunity for this HDIP cap rising to help to some degree, ease some of the housing burden by being able to build even in this environment of high interest rates?
Yeah, I think having that program have a much higher cap now is really going to allow more incentive to create those housing developments, to make improvements, to really put a real focus on an industry that really needs it, because housing is one of our biggest challenges here in the Bay State. Affordable housing is really a challenge. So I think that having that cap go up and then continue to be up going forward as well is really going to make a difference in that industry.
Without a doubt. And I think what's also in contrast to that, or as part of that, I should say, in 2017, the tax package that passed eliminated the SALT deduction for property taxes for homeowners and it capped it at $10,000. So, how does this new tax relief that's going to help property owners in Massachusetts by lowering some of their tax bills, how does that help to kind of offset the increase with the cap on that deduction that was implanted?
Yeah, one of the things that we saw was that even though the SALT tax deduction, that real estate, income taxes, excise tax, that bucket of taxes that we were previously getting a deduction for in our federal return, what we saw though is that even though that went down, the standard deductions went up. The combined standard deduction personal exemptions on your federal returns, those increased. So in general, even though I don't get to deduct the maximum amount of my real estate taxes, we still were getting a higher standard deduction.
Okay.
It's and just so that everyone's aware too, the current rules that we have in place are scheduled to sunset at the end of 2025. So we might see that come back, but we'll have, there's a lot of time between now and then.
There
So
sure
we'll
is.
see what happens. Stay tuned.
There's a rather important election next year that will help to
A little bit.
decide on how that all goes.
Little bit. One other thing I did want to mention, and especially as we look at year-end tax planning here at PKFOD, is we're looking at what are those things that folks should be doing before year-end. And one thing that wasn't part of this tax change, but is a 2023 change for Massachusetts, is the charitable contribution deduction is back in Massachusetts. It's been over 20 years
Oh,
since I've
wow.
seen it back in Mass. So if you are giving charitably, then what you're doing on your federal return, your deductions there, will now transfer over to your Massachusetts. So again, this is one of those things to do if you want to do some charitable planning, maybe not take a standard deduction, but give something more and itemize your deductions. You really do want to work with your tax advisor because there's an opportunity now, beginning again with 2023 and going forward, that those deductions can help reduce your tax bill in Massachusetts. So
Wow.
really something to take a look at. It wasn't part of this change because it was already on the books as of January 1st. But that's really incredible. I do a lot of charitable planning with my clients, and it's a wonderful way for our clients to feel, they want to give anyways, but then to get a little bit more of a tax deduction is really a great incentive to do that.
It is. And I'm glad you mentioned that because for all the WICN listeners tuned in right now, WICN, as you know, is a nonprofit public radio station. Listener support is a primary source of our revenue. So if you would like to make an additional contribution to WICN, you can do so at WICN.org or call 508-752-0700 and reduce your tax bill while you support your favorite radio station. Thank you for the shameless self-promotion.
I love it. I think it's great. I think it's so important. There are so many incredible organizations throughout the world and the country, but certainly in Massachusetts that do so much for those that are getting a lot of these tax breaks already, but to be able to support organizations that can then help supplement this if they're still falling a little short and need a hand. This is a really great way to do that through those charitable dollars. And we get a little bit more of a deduction now.
Absolutely. That's a great way to put it. And you're doing something good for organizations that really need the help, that are doing yeoman's work in the communities throughout the state, I should say. One thing I want to touch on, this is more of a fun side of the tax package here, is there's a dairy tax credit and a cider tax rate. And I did not know until preparing for this interview that there was a cider tax rate in the first place. And I'm hoping you might be able to shed some light on that. In a state where a lot of the economy is driven by craft breweries and small craft breweries, this is a big deal.
I will tell you there are two areas that I do not work in. And I was thrilled to see that we're supporting our dairy farmers and our cider producers as well because I certainly partake and very much enjoy. I live in Worcester County as well, and I just love being able to drive through and see the apple orchards and see the incredible farming community that we have.
Yep.
And I think it's just a great way that we're supporting those industries and really recognizing the fact that that the hard, incredible work that goes into both of those industries, as with many others, but into those industries, and we all get to reap the benefits. So I think that that's fantastic.
Absolutely. And again, small businesses are the lifeblood of the state. It's not just the higher education and the big high tech companies. Small businesses are the lifeblood, particularly in Worcester County and heading west, into the Berkshires. So these adjustments in the tax rate for these industries in particular is essential. And I hate to say leveling the playing field, but it does help to level the playing field a bit and allow them to operate, especially in a startup environment where you may be limited in cash flow and have heavy operating expenses as you get to profitability.
Yeah, and I would say folks are looking for more information on that. The Mass DOR website is helpful. You can go right into what the tax rules are. Again, reach out to your tax advisor, get some more details on that. They did expand the programs. They lowered tax rates. They brought in the classes of some of the beverages in the cider area as well. So I would say, yeah, just look into that if you need more information. Definitely.
Absolutely. And the last question, the time we have remaining, Laura, what are some of the long-term economic implications and the goals that are associated with these tax relief measures that have been implemented?
I think, like I said, the goal is really to show that we are taking a hard look at how we want to run our economy, the types of things that are important to us. Those that participate in our community, those individuals, the industries. I think the businesses as well. Really looking at what we want to incentivize folks to relocate here, stay here, grow their businesses, expand their families, really participate in the community that we have. And that these are just really great first steps in looking at, taking a fresh look at some things that have been maybe sitting for much too long and helping those that really do need it while looking at the greater good of our economy as well and what can we afford and what can we do. So I think it's just really something that we'll see Beacon Hill keep an eye on.
We certainly would hope so. And this has really been fascinating. There's so much to this. Where can folks go to learn more about both the tax changes and PKFOD?
Yeah, so pkfod.com. Absolutely. You can find us there. We've got some articles on this and many other topics as well. And then in general, I would say on the tax rules and changes, like I said, the Mass Department of Revenue website is really fantastic and your local tax advisor.
Fantastic. Laura Barooshian, thank you so much for joining us on Business Beat this week. This has been illuminating to say the least. We'll be back with more Business Beat next week here on 90.5 WICN.